recession is potentially on the cards because the inflation narrative, I think, is about to change. There is a massive liquidation going on as people struggle with their portfolios because basically whatever position you've got, it's wrong. So the market has to deal with inflation plus growth. And what that's basically mean is everyone's hit the liquidate button. So everything's getting liquidated. This is the correlation of one style markets that I was warning about. And it hits everything from crypto to, pretty much everything. And the thing that stands above all ends up being the dollar, because that is the kind of safe haven. Dollar today's had a slightly different day. We've corrected some of the move, but we've seen some huge moves in the dollar, and I'm not sure it's entirely done yet. So there is a massive liquidation going on as people struggle with their portfolios because basically whatever position you've got, it's wrong. And that's the pain everyone's going to have to take for a while.
You started to touch on inflation and growth. Where are we right now?
So I think we're at an inflection point, and a lot of people don't agree with me. So I wanted to go, that's why I did the campaign. It's like, listen, this is a really complicated macro environment, but it's very macro. We need to know and understand from the best people in the world what the hell is going on, because my voice is just my voice. My personal view is that we are doing the transition from inflation to growth. The next shoe to drop will be the inflation shoe. I think inflation and growth go lower, and we either head into recession. Europe looks like it's already in recession. China has been essentially in recession for a while now, but maybe coming out the other side early stage. And the US forward-looking indicators suggest, look, it's not clear it's a recession, but it's clear that the ISM is certainly headed to 50 or maybe just below, which is the ISM, the Institute of Supply Management Survey. Anything below 50 suggests that growth has stalled. Anything below 47 usually gives a recession. So we're getting in the phase where we're going to have a very slow patch, and there is no sign yet that that's turning around. So it could accelerate lower. So the recession is potentially on the cards. It's certainly on the cards in Europe. And we need to figure out, what does this even mean? What does it mean? And I think the big thing it means is bond yields are coming lower because the inflation narrative, I think, is about to change. It's not a good setup here either way. We've either done the damage already or we're going to do some more damage. So these are very important markets, and this is a very macro environment, and it's very, very important to understand what it is. Yeah. Now, if I'm right, and that the inflation story is going to change and growth is going to go slower, then we start shifting into a dynamic where we question what the central banks are going to be doing. And if bond yields are going to come lower, stuff that's been really beaten up, like the further end of the growthy stocks, they should be more interesting in that environment because they got killed by inflation. I think gold does pretty well. It's, interesting enough, gold and growth stocks tend to do badly as real rates start tightening. But they got to zero, and it looks like the world's falling apart, just as the central bank are trying to undertake quantitative tightening, or at least no QE. And if that's the case, then real rates are going negative again, if I'm right. And that's usually good for gold, crypto, long end of growth, that kind of stuff. That's right. You don't stop technology with a recession. What you do is you might stop consumer behavior. You might stop marginal dollars flowing into developing new projects. But the technological adoption of whether it's robotics or AI or space or crypto or any of these, genetics, that's not going away. Yeah. So even if they trade sideways, they become cheap over time because the network adoption keeps growing. Now, sure, recessions can slow these things somewhat. Yes, and you need to use logarithmic charts and understand that these are volatile things. So use logarithmic charts, and I like the regression channels that I use, and you look for things like monthly log charts where they get 2 standard deviations oversold, things start to become interesting. Nobody really talks about price. Everybody is in the build phase. It's really interesting. So crypto goes through 2 phases. One is price, when everyone talks nothing but price. And then when the price or the network kind of is less interesting, people focus on building. Now, crypto companies raised 32 billion in VC last year. So everybody there is seeing what's happening in tech and everything else, and they're immune to it. Now, the crypto token prices might go down, but they're immune to it in terms of their businesses. So what they're allowed to do, they've timed it perfectly in the capital that they raised, is they're able to now, they've all got the capital they need to build the next phase of the crypto revolution. And they're all working hard. I met everybody from people building out derivative marketplaces to NFT stuff through to, the people at Solana building out all of the future of Solana network.
Raoul, where is crypto going? Do you expect a capitulation event?
Well, the capitulation event to me was March 2020, March 2021. That's when we formed the low. Now, looks like crypto, as I said, is going to get hit further and it's going to come a bit lower down. And I think it's still within the broad range that we've been in since March. And I think that's okay because it looks like the networks are pretty stable, i.e. network growth is stable, they're not falling, they're not growing. It is what it is. That narrative turns around if the inflation narrative and growth narrative turns around. If not, they're just weak within this big sloppy range. And I don't see anything to change that yet. Like no instant event. There's plenty of events on the horizon that can change that. There's at the margin, the Bitcoin physical ETF, if and when that comes, ETH 2.0 merge, if and when that comes. There's a bunch of things. There's interest rates falling, if and when that comes. All of these kind of things will start changing narratives within crypto. Meanwhile, crypto is basically just a churning of the same capital within the crypto ecosystem. So capital that was going to leave is left. So it's a churning of capital, which is where NFTs have been a place where people have made money because that's within the ETH economy. It's a separate economy. It's outside of the US dollar economy. Right. People tend to go into the ETH system and don't leave. And so they tend to look at NFTs or DeFi and other stuff and rotate around. And that's what's happening now. And the bottom end of the range is the 30,000 level. There's plenty of institutional buyers around. There's plenty of people setting up, as I say to people. It all takes time. And people are coming slowly into the market, but this macro backdrop's not helping. So you just kind of have to tough it out. I mean, that's what this thing is all about, right? Crypto is all about that. Bitcoin itself, using the monthly logarithmic chart, I think it's pretty close to 2 standard deviations oversold now. I'm just doing the chart. Unfortunately, I can't show it on my screen, but I'm just going to have a look. So the 2 standard deviations oversold tends to be where this stops at maximum. 1 standard deviation, this is where we got to in March 2020, is roughly where we are now. So March 2020 got to here. The sell-off after, in fact, it never really goes down much further than this versus its logarithmic trend. So we're kind of in that zone, but that's what we're kind of saying anyway, which is, 30,000, at worst 20,000 would be, the final bloodbath level. Who knows? But, again, the idea of this space, if you're looking at network adoptions, I don't trade the space, I never have. I just look at it and say, I want to own the long-term trend. The long-term trend of adoption is going higher. I see no reason to change that narrative whatsoever. So you just keep dollar cost averaging.